Welcome to Money Market Show. I'm your host, Paul LeJoy. The Money Market Show is brought to you by the Money Market Inc., your Amazon for mortgage solutions. Know someone who's looking to buy, sell, or refinance? Hey, let them head to the moneymarketinc.com. Today, I want to share with you an amazing series. Is the seven most asked questions, frequently asked questions by some buyers that come to us at the money market. I got 15 of them, but today I'm going to share with you the top seven. Buying a home is one can be one of the most daunting experiences you can ever have, especially if you're a first-time home buyer. I know it was for me when I bought my first home here in Manteca, in California, in Manteca. Four bedrooms, three baths, one three-car garage, a swimming pool, and all that stuff. Okay, I liked it. So I asked my realtor to make an offer. The offer was accepted. But the most daunting experience I had was, nah, I'm going to sign the loan docs. The realtor never told me about this. The loan officer never told me about this. They said, "Oh, you just told me go to the title company." I went to the title company, and I freaked out because she gave me a stack of paper like this. I thought, "What is this? What am I signing? I don't know." I freaked out. I went home. I went home. I went home. I went home. I came back the following day. I said, "Okay, let's just sign. Let's sign. Let's sign." Okay, cool. So I want to educate you. Let me start with the seven, right? So, do I need great credit? Do I need great credit to buy a property? Absolutely not. You don't need great credit. Great credit only helps you when with your interest rate, right? So, the better your credit, the higher the credit, your FICO score, the better terms you get, the better interest rate you get. So, let's say you buy a property that was $970,000 here in the Bay Area, okay, and let's say you bought that property, no money down, and guess what, your interest rate, if you are at 620 versus you are 700 plus, the difference in interest rate is humongous, therefore affects your payments over time. Therefore it behooves you to have a great FICO. Have a good FICO. But you don't have to wait to get a great FICO in order to buy, because you can buy, guess what? The values keep going up, going up, going up. If you have to wait to get a good FICO, you might not even to be able to buy it. But we can help you with that. Number two, how about this? Do you need a huge down payment? Some people think you need 20% down to buy a property. That's nonsense. You don't need 20% down. Actually, we can help you buy a property with absolutely no money down. Okay, cool. Number one, if you're a VA, a veteran, you can buy a property, no money down. Number two, if you're buying a rural area, you can buy a property, no money down. But also, guess what? You can buy a property, no money down if you're FHA. FHA, okay? FHA, 3.5% down, but you don't need 3.5% down. I can help you buy a property with zero down. Okay. If you have questions about that, comment or call us, okay? Or email us, okay? But also, if you do a conventional loan, right? Conventional loan, you only need 3% down. That means you can buy a property for $1 million here in the Bay Area with only 3% down. How is that possible? Yes. The only thing is that you're gonna have an MI, which is a mortgage insurance. You're gonna have mortgage insurance for sure. So that is going to affect your what? But guess what? Don't have to worry about that. Okay, you don't have to worry about having too much money down or having credit, good excellent credit before you buy. No, you don't need that. Now let's go to number three. Question number three. How about closing costs, Paul? How about closing costs? How about closing costs? Oh yeah, good thing you asked about closing costs, right? Well, closing costs, right? Typically will be about 2 to 3%. What do you pay? 2 to 3% of the purchase price. Okay, and what does that entail? And it depends on which county you are in, because you got to pay escrow fees, title fees, you got to pay lender fees, and all those fees. You got to pay prepaid items like insurance and property taxes and stuff. There's city transfer tax and all those things that you have to pay. That means, therefore, you have closing costs, and those closing costs will be by 2 to 3% of the purchase price. Number four. Okay, you asked me about rates. Not rates. Okay, should you have a fixed rate mortgage, or adjustable rate mortgage? Hey, Paul, that's no brainer. You must have a fixed rate mortgage in the current market. Guess what? Because the rates are going up. They've been down for a long time, below 3%. Now they're inching up. They're over 4% right now. You got to lock your rate now. So if you're a first time home buyer, guess what? Don't play with this. You must get a fixed rate mortgage. Don't go get a bloody, adjustable rate mortgage. Never get that. You only get an adjustable rate mortgage when the rates are going down, or you want to get this property and sell it, in a very short time. But nowadays, under at March 2022, the rates, I mean, adjustable rates are not the best. Okay, why would you even worry about getting that stuff? Get yourself a fixed rate mortgage, right? You only get an adjustable rate mortgage when you anticipate the rates going down. They've been down for a long time. They're only going up right now. They're only going up right now. Listen to me. They're going up. They're not coming down. So get a fixed rate mortgage, my friend. You listen to me. You got to listen to me. Get a fixed rate mortgage. No adjustable. Okay. Now let's talk about number five. Number five. Say, okay, I got all these things, Paul. I got this. How about locking my rate? The moment you find a property that you like, the moment you're in escrow, right? You got to lock the rate. Tell your loan officer, tell us, we are going to lock your rate. I'm going to advise you, lock your rate. You don't float it. You only float the rate, okay? That means you leave it without locking it when the rates are going down. But in an age where the rates are going up, you got to lock your rate. The moment we find your property, or your realtor finds your property, you got to lock the rate, okay? Cool, that's great. Understand? You got to lock the rate. Lock it for the longer, the better, okay? Don't lock it for 30 days, because if you lock it for 30 days, guess what may happen? Because the appraisal might not be done in time, and now if you have to extend it, you have to pay for it. So lock the rate, okay? 45 days, 60 days, okay? Number six, what type of mortgage should you get? What type of mortgage is best for you? All right, should you get a conventional mortgage? Should you get a jumbo mortgage? Should you get an FHA mortgage? Should you get a VA mortgage, or you should get a USDA? It all depends. Okay? It depends on what's your credit score. It depends on how much you're putting down. It depends on many factors. It depends on what you feel comfortable with. If you're a VA, you serve the military, by all means get no money down, get a VA loan. Or you're in a rural area, get a USDA loan. They're cheap, right? But if you're in an urban area and you don't have enough money down, get, of course, by all means, you should get what? You should get a FHA loan or a conventional rate, only 3% up. Now, the last thing we're going to cover today is what? We're talking about points. Points. I got a lot of people coming to that. Paul, no points, no fees. Really? No points or fees? That's crazy. You should buy points if you're able to buy points down, right? And if you don't have money, right? Guess what? The seller can pay all your closing costs, including the points. Okay, if you're a VA, if you're a VA or your FHA, they can allow up to 6% seller credit. 6% seller credit. I'm not telling me it's a seller's market. I've seen some properties on the market for a long time. Properties are lingering. Depends, right? You can get a good deal, and you can put no money down and have the seller pay your closing costs, and you have the seller pay your points, right? That is doable. That's doable. So buy the points, because your points are tax deductible. The MI is tax deductible. Your interest is tax deductible, right? Your whatever your taxes, property taxes are tax deductible, right? So I hope you got something from what I shared today. We got 15 frequently asked questions today. I shared with you seven of them, right? So if you like this thing, by all means, subscribe to the channel, my friend. Subscribe to the channel and share it. Share with your friends, your relatives, your colleagues, and business partners. Share it. Okay, by all means, like it, man, like it, and comment. Give me some comments. Encourage your brother here. Okay, so thank you, right? And then if you want, you have a question that you can't wait, just call me 415-510-0127, 415-510-0127, and also you can email me LeJoy at the money market .us, LeJoy at the money market .us. And if you can't wait to fill out a loan application, by all means, go to what? themoneymarketinc.com, themoneymarketinc.com, and fill out our user-friendly application. And we're looking forward to helping you get your first home. Maybe you know a friend, a family member, a colleague, and anybody else who looking to buy, sell, or refinance. by all means, don't keep us a secret. We're here to help you. I hope this has been helpful to you. So until next time, stay safe. This is Paul LeJoy, your mortgage consultant for life. Have a great one. God bless you. God bless America.